So now we need to build an income statement. Taking a look at the Knights Own ledger, we notice that these are T accounts, and a period of time has gone by where we've done all the transactions using a T account. We're going to skip the T account and go right to the trial balance, and we notice that all of the accounts are listed on the trial balance, and yes, it does balance. The debits equal credits, which is a good thing. From there, we need to learn how to make an income statement. So we're going to take the balances from the trial balance and put them on to the income statement. We only need to take revenues and expenses. So the service revenue was $450. So we'll put service revenue for $450. And if you can recall, expenses were $50 for advertising. It's a pretty simple income statement. As we see, our total revenues are $450 and our total expenses are $50. So net income is therefore revenues minus expenses. Therefore, it's $400. Now we'll also learn in this how to build a balance sheet. If we're looking at the trial balance, we need to bring over all assets, liabilities, and owner's equity accounts, minus the revenues and expenses, of course. So we'll look at the balance sheet, and we see that we've listed cash, accounts receivable, all the way down to office equipment. So we need to start bringing over some totals. We've got $1,140 for cash. And we'll look at accounts receivable. So we need to go back to the trial balance to get all of these totals. Accounts receivable is at 0. We have supplies $290. And again, we've got office equipment and shelving. And we've also got office furniture for $500. So we're looking at our total assets of $3,050. Now let's do our liabilities. Accounts payable. Looks like we have a loan payable of $1,000, and I'm not sure accounts payable, we have nothing. So we'll just put in the $1,000 for the loan payable. And this is where it gets a little bit tricky. We'll go into the owner's equity section. So the owner's name in this case, we'll just put Knights Own. The beginning capital. In this case, the beginning capital, we'll just use $1,750. And we need to add the net income. The net income was from the income statement, and we can recall that it was $400. And we need to decrease the amount by how much we took out in drawings. And in this case, back to the trial balance, it was $100. So all of our numbers are in. And looking at the new capital section, the new ending balance for capital is $2,050. Recall that we started with $1,750. We've had a net income and some money taken out for drawings, so we had an increase in capital of $300. Notice how in our assets they do balance at $3,050, and our total liabilities balance as well as $3,050. Notice the heading, who, what, and when. The when is a specific date. Looking at the income statement, who, what, when. The when is a period end